Well, we're keeping a close eye on semiconductors here this morning. The sector seeing a little bit of pressure after Micron's Q3 earnings were overshadowed by the company's Q4 guidance, falling short of AI-driven growth expectations. And while the AI-fueled rally has pushed broader markets to new heights this year, let's not forget about some of the other sectors that could enhance your portfolio. Here with more is Jeremiah Buckley, who is the Janus Henderson Investors portfolio manager. Great to have you here with us, Jeremiah. I mean, there's been so much crowding into the tech trade, especially within the theme of generative AI, but where else are you sensing some opportunities right now?
Yeah, thanks, Brad. Thanks for having me on. I appreciate it. So there are other areas of the market that we're excited about as well. So one example would be healthcare. So we're seeing lots of innovation in biotech as well as medical devices, which continues to be exciting, and we're seeing good growth there. We're also excited about areas of consumer discretionary. So we think e-commerce continues to grow at a rapid rate. But we also think that cash-rich consumers are really in a good position right now. And so one of the areas that we like is travel. We continue to see strong recovery globally. And so those companies that are exposed to global travel trends continue to be favorable for us. And the last one, a more kind of value-oriented area of the market is capital markets. You know, we've seen a couple of years of weak capital market activity. We think with interest rates stabilizing, a lot of pent-up demand, we'll start to see an improvement in capital markets as well. And so some of the investment banks or a lot of the companies that facilitate capital markets activity, we think are also attractive here.
You know, it's interesting. We were speaking earlier today with Kevin Gordon of Charles Schwab, who was talking about one of those sectors that you mentioned in healthcare. And I just want to zero in on that for a hot second, because he said as of yesterday, and he was talking to us, about some of the areas that he sees right now as weak, but ultimately saying only two sectors with less than half of their members are trading above the 200-day moving average: consumer staples and healthcare. What does that indicate to you, especially as you're looking across sectors and trying to figure out where there still is some broadening that is yet to take place?
Yeah, so the market has certainly been more aggressive. And so the two sectors that you name are certainly more defensive sectors. And so they've trailed as people have shifted capital to the higher growth sectors like technology and communications. But we think that there's attractive growth opportunities, like I mentioned, in biotech and medical devices. There's a lot of innovation. You see companies that are growing, high single digits, low double digits. And so we think healthcare can be both defensive if we do have some volatility in the markets, but it also is offensive in that a lot of companies are innovating and driving good and attractive growth.
You also mentioned travel a moment ago. One of my favorite sectors to talk about here and continue to track. When you look across what the difficulties are for maintaining margins right now, and especially as many of the airlines, if we're looking at that particular subset of the sector as well, are trying to figure out their own routes, their schedules, and the ability to take on new aircraft. How much of a concern does that kind of present as you're evaluating the overall health of that industry?
Yeah, so we're focused more on our ownership is in hotels as well as the OTAs like Booking Holdings. We think those are better business models than the airlines, but obviously the airlines are an important aspect of making sure that we have enough supply so people can fly to those hotels. As far as the airlines, I think we're seeing differentiated results between the domestic-focused airlines as well as the global airlines. A lot of our thesis around the travel recovery is outside the U.S. I think we're back to a normal trend line in the U.S. And so with those capacity additions for the airlines, that's led to some difficulty for those U.S.-focused airlines. But if you look at the global airlines like a Delta or United, they've had better results. And that's a big part of our thesis is that global travel recovery.
Jeremiah Buckley, who is the Janus Henderson Investors portfolio manager. Jeremiah, thanks so much for taking the time here with us today.
Thanks a lot for having me on.